You're with Julian on the Brown Note, and Gamestop has been the most innovating and satisfying story to have broken in a very long time. It's made the whole world fluffy and happy. Everyone, there's no less sympathetic animal on earth than a Wall Street hedge fund manager. What they've done over the past 4 decades is make intolerable profits for doing virtually nothing, and what they do is incredibly destructive. So if you haven't followed it, GameStop is the blockbuster video of computer games, and they were going rapidly downhill. Last year, their shares in America were at $3 a share. So hedge funds bought loads and were banking on them going bankrupt and doing what hedge funds do, cashing in when they go bankrupt. Now, short selling, again, part of the derivatives and options and futures markets of the stock market, which if you watch the movie Big Short, they kind of said they just deliberately create these things so that no one understands what they're doing. They're just gambling. They're gambling, but the house always pays. As we saw with the global financial crisis, when they got paid out even when they lost. They lost everything and we paid. And now they're still gambling. So short selling. Trademark analogy time. Say you had jumpers for... Sorry, I'm just getting some really horrible static there. Say you had some jumpers in winter. They're freezing cold, $10 a pop for a jumper. So you buy 100, you sell, crucially, you sell 100 jumpers at $10 a pop. But you don't have those jumpers. So you're selling them at $10 a pop in the middle of winter, but you don't have to deliver them to your customers until summer. Now, when summer rolls around, the cost of those jumpers has declined because of the hot weather. They're only worth $5 a pop. So you have to buy 100 jumpers to fulfill the order that you've sold. And that's where people get a bit confused. So you've already sold them, but you haven't delivered them. So you've then got to go and buy 100 jumpers for $5 each. $500, you've got a $500 profit because you sold them when the price was higher. So you basically sold $1,000 worth of jumpers, but you only paid $500 for them, $500 profit, win. Now imagine if it gets to spring and Kate Middleton wears one of those jumpers. Suddenly they go through the roof. Suddenly your jumpers have gone up to $100 each and climbing. You still have to buy 100 of these things to close out the 100 you've already sold that you don't have. And that's what happened to these hedge funds. You can keep in the game and it can keep rising, as it has done with GameStop, or you bite the bullet, which is what the hedge fund's done. 2 of them have been devalued by billions of dollars bailouts, and you buy 100 jumpers at $100 each, 10 grand. You just lost $9,000. So that's how short selling can be both incredibly profitable for you doing next to nothing. You're just using the difference between the price at one point, selling something you didn't have, and buying it for a cheaper price, but you haven't even delivered the goods yet. And if the goods go up a lot, you still have to buy them, even though they're worth much more than what you actually intended buying. So was my maths right there? Yes, it was 10,000. So you lost $9,000 on your deal because you sold $1,000 worth and you got 10 grand to pay out. Now, this used to be a good thing. This used to be what people that sold tangible goods like wheat and coal and beef, they would use this to alleviate the dangers of market fluctuations. So they would have, say, wheat contracts or beef contracts or coal, and they would sort of set the price what it is today. They would sort of sell off or buy, depending on which way around they can short, or they can, short sell or short buy. Which way around it was, they would set a price so that they didn't lose too much if the price fluctuated in the wrong direction, because they already had this counterweight, which was called a hedge. They were hedging their bets. They wouldn't make dramatically, if the price went up of their goods dramatically, they would lose a little bit because they wouldn't get the full increase because they already had a price settled. But if it crashed, they wouldn't lose so much. So it was called hedges. And that's what it was, insurance. But what hedge funds do is they gamble wildly, speculating on companies they think are going to go bankrupt or that they actually try and go bankrupt. Now, this is where the hypocrisy comes in. This is like, it's 100 times worse than casinos saying that you aren't allowed to count cards in blackjack. Why not? You've beaten the game. If you're clever enough to beat the game, you shouldn't be barred. You're not doing anything criminal. You know, you've beaten the game. Here, Wall Street is complaining about people operating on exactly the same level as they are. This time it was small investors through an app called Robinhood, and Wall Street Secrets was the Wall Street Bets was a page on Reddit with 2 million subscribers, a lot more now, where people would go on and share tips, and they rallied again because GameStop was gamer nerd territory, and they saw these hedge funds circling like sharks and trying to kill it. They rallied together in their thousands and started buying up the stock that Wall Street had already sold. Even though they didn't own it yet, they still had to buy it. They'd already sold it at a low amount. So they started driving up this $3 stock into the hundreds of dollars, where these hedge funds then had to buy at that rate to close out their positions, to make good, to actually fulfill the sale orders they'd already made, which cost them a few $1 billion, and everyone is very, very happy. But they wanted to stop the small guy doing this. Now, some of the hypocrisy about this is just jaw-dropping. Wall Street occupies virtually every single step of government. Trump appointed dozens of Wall Street top dogs, 7 Goldman Sachs alumni, I think, in his administration. So did Obama, so did all of them. So did Bush, so did Clinton. There's just a gravy train from Goldman Sachs through the Treasury back. And they just look after Wall Street left, right and centre, and everyone's waiting for a government to step in and actually legislate against the small investors. And one of the biggest hypocrisies was when they said that these people aren't betting on the fundamentals of a company and they're artificially driving up the share price. Hedge fund managers don't bet on the fundamentals of a company. They use their massive $100 million bets to crash companies. They deliberately use the power of the visibility of them betting against the company through hundreds of millions of dollars to cause it to fail in the first place. It has nothing to do with the fundamentals of a company. And the one really good difference between these small investors and Wall Street, whenever Wall Street bets on companies, it's to liquidate them, to destroy them, to take away the jobs, the bricks and mortar stores, to ruin the company and then pick up their gold. At least these small investors have given GameStop a huge cash injection of hundreds of millions of dollars that will likely save the company and has generated a whole new consumer base for them. At least a lot of people will lose money. Of course they will. It's the stock market. Eventually it will crash in some way. But at least everything they're doing is positive for everyone that works there. You know, their share price has gone through the roof. The company is looking rosy. And you can say about fundamentals, but most of the time companies are driven down. It isn't fundamentals. If you've got a really good company paying wages that are brilliant, your stock price will fall. If you start cutting staff wages and conditions and charging your consumers more money, your share price goes up. There's no fundamentals here. It's absolute rubbish. It remains to be seen how Wall Street will stop them, but the damage has already been done, and I hope that it is already happening to other companies. So go, all of you crazy share investors. Really sad to see the Robinhood trading app turned against its own small army for the favour of Wall Street, actually blocking sales of GameStop shares or blocking new buys of GameStop shares for the benefit of Wall Street, when your entire business model is to be a small investor's weapon. And that is one of the dumbest things I've ever seen. I think it's been freed up. But anyway, all power to you GameStop people and the hypocrisy of Wall Street.